Okay, good morning everyone and welcome for today's financial hearing with Clas Ohlson. I also like to welcome everyone participating via the webcast and telephone conference. Moderator today is Niklas Ekman from Carnegie. He will be back later and lead the Q&A session, but I now hand over to the CEO of Clas Ohlson, Mr. Klas Balkow. Please go ahead, sir.
Thank you, and let me of course also say good morning everyone and welcome to Clas Ohlson and our store here in Drottninggatan. I hope you see and feel the atmosphere here in the store. We have now launched a lot of new parts of our range, particularly in the lighting, so I think we hope you get some opportunity to spend some time in the store after the presentation. But we are of course here to talk about the financial report for Clas Ohlson in the first quarter of our new fiscal year 2015-16. And the agenda we have set up is I will go through the key ratios for the first quarter, as well as comment on the activities after this period, particularly the August sales, but also provide some future outlook in terms of how we look particularly then in terms of the currency challenges that retailers as us is now facing. But also highlight, and I think some of the high energy we have at the moment in the company in terms of the future activities and the future plans we have to move forward. Before we go into that, let me just give you a quick snapshot about Clas Ohlson today. We have 200 stores. We are now in a rolling 12 turnover of reached 7.5 billion Swedish krona. And we continue to be one of the strongest brands, I would say, particularly in the Nordics. Moving then into the first quarter, and just to be clear, as our fiscal year is between May and April, so the first quarter reflects the numbers from May to July in 2015. And if I would say some highlight about the quarter, I would say we are leaving the quarter with a strong sales, another record sales period for Clas Ohlson, particularly then a positive summer month. And I would also say despite one-offs as well as some currency challenges, we are improving our profit versus last year. Going then into our key ratios, again, sales up in a positive momentum, sales up 8%. We are growing in local currency with 8%, but also in Swedish krona. We are reaching almost 1.8 billion SEK. We have support on our sales growth from more stores. We have 13 more stores in the network. That of course is adding to our numbers. But I will also say positively, we continue the healthy trend with positive like-for-like growth. In the quarter, we are growing with 4% in like-for-like, which is resulting then in our 9th consecutive quarter with positive like-for-like. And as you can see, our long-term target is above 2%, which we are aiming to reach. If you then go into sales share per market versus last quarter, there are not any large changes in that. We are growing equally in all markets, more or less, so there are no big variations. Hence, Sweden is still our largest market with 45% share of sales. And a few comments about Sweden, if you look into the data, the consumer confidence in Sweden is slightly down versus last year, but still, I would say on the long-term average. Positively, though, to note that retail sales in general in Sweden continue its positive trend as we've seen in the last months and continue also then in a positive summer period in Sweden. And I would say that this is also somewhat reflected in our numbers also for Clas Ohlson. We are leaving a strong period behind us in Sweden. We are growing with 6%, and a majority of that is then reflected in our like-for-like. We are clearly gaining market shares when we look at our various categories, and could also comment, of course, that we had a positive quarter, but a significant positive July sales. But also have to say, in all fairness, the weather conditions, I would say, was to our favor, to us as well as to many other retailers in July. I'm not sure how you felt it as consumers, but as a retailer, it was a good month. Moving to Norway, consumer confidence continued to decline, as you can see on this chart, while have to say that in terms of how this is reflected in the retail sales, we're not seeing the full effect of the consumer confidence, not at least yet. It's slightly down, but still on an okay level. And looking at our performance as well, I think that we are really continuing our strong performance in Norway despite the soft confidence in the market. We are reporting a 12% sales growth in local currency. Majority of that is, or a majority, we have a positive base, positive sales growth on our base. But of course, we also in Norway have somewhat more stores. We have 8 more stores compared to last year. So that's, of course, supporting us in our growth in Norway. But we continue to strengthen our position in Norway. We continue to spread out our store network in a positive way. Moving to Finland, confidence, as you can see, is flat versus last quarter, while also on a positive side, it's more positive versus last year and somewhat in a better trend, still somewhat fragile. And looking at the retail market is still fairly soft, and we are still not coming up to decent levels in terms of growth in general in the Finnish market. And I would say that in this climate, I think it's positive to see that we continue to grow. We are growing with 7% in local currencies during this period. We continue to strengthen our brand. We continue to strengthen our position in the Finnish market despite some challenged retail overall climate. UK, moving into that, the long-term confidence, as you have seen over the years now, is going in the right direction. It's on a positive note. However, not really reflected in retail spending. This summer, particularly, I would say, we have seen a fairly soft trading in general. And I think if you're reading the UK press, you can see even the last few weeks there, it's been that the traffic on the high street in the UK has been the softest in many, many years. So it's not been a positive traffic in general in terms of spending in UK during this summer. Looking at our number, and then we are combining the UK with also our store in Dubai, where we are reporting the outside Nordic. I would say that if you look at our UK performance, specifically the like-for-like has been flat versus last year. We have had a very positive momentum in the UK for the full last fiscal year. Now we've been flat. But also should remind you of that we are meeting very high comparable numbers last year. We had over 15% like-for-like growth in the UK last year's first quarter. So we're keeping on that level. We want to see more, but we are on the flat this summer. And I think also somewhat related to the overall softness in the market. Totally, I will also say that we, in terms of we are growing in local currencies, but totally I will also say that the Dubai store is now really going in the right direction. We are moving on in that, and we are seeing now with a positive momentum in the summer, we are now looking clearly to take the next step to find the next store for us in Dubai. Moving on to the next ratio, our gross margin. I'm saying despite then the negative currency effect we have seen in the quarter, we've been able to offset the majority of the impact behind sourcing efficiency and improved sales mix. But I think it's worth noting that the positive effect we have seen from our new transport agreement, which we implemented in March last year, affecting starting in July last year, has now played out its role. Somewhat also looking at the same part in terms of hedging and the inventory time lag effects, now to a large part have a limited balancing effect for the future. But looking at our gross margin in the quarter, we are more or less in line then with last year at 40.4 percentage points. The share of selling expense as a next key ratio is down to 31.0 percentage points, which is, of course, is behind increased productivity, mainly due to our improved like-for-like sales. We've had somewhat higher startup cost, but it's minor, so I think we are improving our productivity, which is, of course, a clear effect of that we have a positive like-for-like momentum. This then sums up the first quarter in terms of operating profit, where we are growing with 4% to 106 million SEK, which then includes a one-off cost of 10 million SEK related to closing one of the UK stores that we have done in August. In the period, we continue to invest, and as you can see here, we are more or less in line with last year in terms of investments. Majority of our investments at the moment relates to new stores, but as you can see on the slide here, a large part of the investments of approximately 50 million relates to IT systems, and particularly then the transformation we're now working on when we are building our new ERP platform in the company. A program that is going according to plan. It's going to spend over some years, as we have highlighted. It's going to be a 5-year program, and we continue to go in the right direction there, which will give us a lot of opportunities for the future. We continue also to have a strong cash flow. In the period, we reporting 170 million SEK in terms of cash flow, which is in line with last year. The inventory that we are reporting end of period is higher versus last year. Relates to, of course, we have more stores, but clearly now also is reflecting the changes in the currency, where we are now seeing the dollar effect comes into our inventory. We are improving our net cash holding to 600 million SEK, which is up with 140 million SEK versus last year. So I think it's fair to say that we continue to strengthen and having a very strong financial position in Clas Ohlson at the moment. Relates to that, just to remind you of that, as we shared last quarter, the board has proposed to the upcoming AGM an increase of the dividend payout with 11% to 5.25 Swedish krona per share, and the recorded date for the dividend payout is September 15th. Let's now move on from the key ratios in the quarter and some of the financials period end. And let me start with the August sales. As we've just released that this morning, we're up 2% in local currencies, and fair to say, somewhat on the soft side versus what we've seen, particularly in the quarter and the last period. But I think if you look at it, if you summarize the summer, we have a strong, healthy summer behind us. August has been a summer month. You've seen a very positive July. And I would say not talk too much about the weather, but of course these kind of weeks when you have great weather and back and forth is also reflecting some of the retail spending. And I think you should see it as a whole. So from a total perspective, it's a positive one. We had a positive July, somewhat softer August. Worth commenting, and you can see the reflection is more or less in all markets. Worth commenting then on the UK, this includes that we have closed one of their stores, but if you look at UK like for like, it is very much in line with what we've seen in the first quarter. Moving on as well, and some of it you see here in the store, we've also now launched our new autumn range that we have a lot of energy for. We kicked off a lot of new items, new products. We have launched over 1,000 new products. And in conjunction with this, of course, we're also releasing our new catalog. But as you can see, we have reduced the volumes outside Sweden in terms of catalog distribution. But we're also taking a clear next step in the way we are communicating to the market. We are reflecting the need for a catalog. We'll continue to drive that in Sweden with positive demand. In the other markets, we are reducing the volume, but we're also adding new ways of communicating to our customers, which I think actually we are breaking new grounds. But I'll come back to that a bit when we're talking about the strategic priorities and the way we are focusing on moving forward. But also after the quarter ended in August, we actually celebrated another milestone in the company. We opened up our 200 stores in Clas Ohlson, which we celebrated, particularly internally, but also with our customers, a full day celebration. And I thought that this could be an opportunity for you who's not been with us in an opening. It's actually a fantastic atmosphere. We have a 1 minute, I think, video here that will show you how it looked when we opened up the store.
Tradition på Clas Ohlson att vi hoppar in i våra butiker och då behöver jag er hjälp till det här också.
Är ni med? Ja! 3, 2, 1!
Well, I hope that gave you some kind of glimpse of how it looked like and the energy that actually we are spreading with our customers, but also very much internally. It's been a fantastic milestone for the company. If we're now moving on from that into the future outlook, and I think that I will directly go to the part that I think is of highest interest for all of you, which is the challenging currencies that retailers like us is currently facing. And as shared, and I think you all know already at this stage regarding Clas Ohlson, we have a high share of sourcing related to dollar and dollar-related products, and also fairly high sales related to Norwegian krona. And the development of these two currencies is not going in our favor at the moment, as you can see. Particularly the recent months, the negative NOK effect has increased. Now, to some extent, I would say that we've been able to offset part of these effects, as you've seen in the key ratios we just reported for the first quarter. But moving forward, we highlight that the coming quarters, we will have further negative effects on our currency, on our gross margin. Now, how large? Well, I think that is a question you all want me to answer, but have to make you disappointed because I will not be able to do that. First of all, it is difficult to predict due to many influencing factors affecting our gross margin, as shared with you many times before. But also due to competitive reasons, we are not willing to give a more detailed forecast regarding our counteracting measures. But coming into the measures, we are confident that over time we will be able to balance these effects. Now, how long time will of course depend on the progress in the work we are now doing with our counteracting measures. But as shared with you previous quarters, we have 3 clear areas that we are working on in this program to manage the currency effects. First of all, we'll never compromise on our price position. We are a value retailer and will continue to be that. Still, these currency effects impact the whole industry. Which then, of course, leads to that we monitor and follow the market closely so we can act on the pricing development in the market. Secondly, we have a positive momentum in our sales mix. we continue to drive this agenda together to that we are furthering developing our own private label, which is improving the value for our consumers. At the same time, of course, it is also strengthening the margin for Clas Ohlson. And finally, we have full focus to continue to improve the efficiencies in our supply chain. We talked about the transport agreement. We'll continue to work on to improve our transports. We'll continue also to work on efficiency measures in our distribution center. We also continue to take steps in increasing our share of direct sourcing. And we are also now taking even further initiatives together with our main suppliers to improve efficiencies. But also, particularly for those suppliers in China, we are capitalizing now on the effect from the RMB depreciation versus the US dollar. This will take some time, of course, until it goes through the inventories, but these are the clear actions we are at the moment working on. So, there you go for these 3 slides. Net, to sum up, I would say despite the progress we are doing, which I think is going in the right direction in terms of the counteracting measures, the currency situation is a challenge the coming quarters, and we forecast a further negative gross margin effect. Over time, though, we are confident that we will be able to balance these effects as we have always done historically. I'm sure there will be some more questions regarding this topic, but I'll leave the gross margin for now. Let's move on. And I think clearly we may have some short-term currency headwind, while I would have to say that the energy in the company at the moment for our future is really, really high. And let me just give you a few updates on some of the strategic priorities that we are now working on. First of all, we are now taking the next steps in the UK. We have full focus now to open up our new stores in the UK, where, as we have announced earlier, going to focus on smaller formats in the London area, which gives us an opportunity to take advantage of the brand that we built up in the UK. At the same time, we are also using the e-com. With the smaller format, we're going to work with the pick-up in-store format, which is a very positive or very strong way of working for the consumers in the UK. And we will now launch this within the coming weeks, where the first stores we're going to open up in St. Albans now short to come, just in a few weeks down the road. We'll continue to take the next store before Christmas period. We also continue to work on optimizing our store network. We've taken steps already. We have reworked our store in Manchester. We reduced 1 floor. We implemented that in June, July. And as flagged already, we have now closed our store in Birmingham in August. Last quarter, we also announced our launch plan for Germany. And even if I today don't have any more news to come with in terms of our plan, more than the plan is really, we are on track and we are really going according to plan. I just want to highlight that since we launched these out in the market in Hamburg, I have to say that the interest for Clas Ohlson entering this market is really, really high, which is, of course, we think is very, very positive. So we truly look forward to our entrance into Germany. But our focus is not only on our international agenda. We have full focus to work on all channels, on all our sales channels in our omni-channel strategy. And it's also in our various channels, we also have very high energy and positive momentum. The e-com development is really going in the right direction, as well as the Club Clas that we have in Sweden and Finland continue to attract more customers. We're up to over 1.8 million customers, which are members in our program. As well as last year, we launched the Clas Office program, which is now showing healthy growth, still coming from low numbers, but it is a positive momentum where we also positive for us that we are looking into actually a new customer segment. We're also taking next step in the sustainability efforts. Last week, we announced our new sustainability concept, what we call From Here to Sustainability, which I think summing up all the work that we are doing on our sustainability areas internally, but more importantly, it gives us now a tool to engage the customers in all these activities, how we can support and help the customers to select and make more sustainable choices for a more sustainable lifestyle. As well as we are launching and focusing a lot to launch just products that provide just a more sustainable lifestyle. Further, this week, we just kicked off our new communication concept. And as I said, I think we are starting to see that we are breaking somewhat new ground here in terms of how we are communicating. We have, as you know, a large range of products, a large range of practical, technical products, but also a lot of product that needs hands-on guidance and also inspiration how to use them. Some of that we used in the catalog and in printed material, but we're now taking next step to use video or movie to explain and to inspire of how to use our wide range of products. As you can see here, we are actually aiming high. We are planning to produce 5,000 film clips already this year. And I think we are now, as you can say, taking the catalog to a completely new dimension in terms of customer experience. And if this works, I would like to show you some examples.
We know that customers actively seek information, and in the new advertising landscape, it is possible to meet customers in their scope of interest. Therefore, it is our responsibility to ensure that every door they knock, they are met by our brand when it opens, rather than someone else's. This new strategy sits perfectly with our idea of product first, and we have created an exciting and innovative model that we should adopt moving forward.
Hej! Vi på Clas Ohlson gör över 850 olika belysningsprodukter. Det här, det är min favorit. Artikel nummer 365596. Se den och många fler på vår hemsida eller i någon av våra 200 butiker. Välkommen in! Ja, det är lugnt. Vi har även proppar och säkringar. Hej! Vi på Clas Ohlson, vi har över 850 belysningsprodukter.
Vänta Thomas. Alltså helt seriöst, lugn. 850 belysningsprodukter, det här kommer inte gå. Gå istället in på Clas Ohlsons hemsida, klicka på mig och se vad jag gör med till exempel en sån här lampa. Det räcker ganska långt Thomas, alltså ta ner här för det här kommer aldrig gå. Okej. Skulle man dra ett streck rakt genom hela Sverige, och då ser det ungefär ut så här. Jag vet att många av er har den här ytan hemma och vi ska piffa upp den med lite belysning. Jag lovade er ett bra tips. Det här är ju egentligen taklampor, men jag tog 3 stycken, slog ihop dem, la dem här. Så vänner, då var vi klara med det här rummet. Vill ni se mer? Ja, det är bara att klicka på nästa och titta på.
The flex hose is very lightweight. It expands up to 22.5 meters.
Switchblade, a bright light on a cityscape. Wherever she goes, I'm gonna chase.
Det är så att en sån här bänk med massa belysning, det vill man inte hålla på och sätta av och på, av och på, av och på. Jag löste allt med denna lilla fjärrkontroll. Ett tryck, klart, det är bara att gå hem.
I den här filmen
så hinner du se några av våra produkter. Men om du går in på vår hemsida eller i någon av våra 200 butiker, då kan du se hela vårt sortiment. Välkommen in!
Okay. I think and I hope that this gave you some idea on what we're trying to do. But I also have to say, I know that this group, you're more into the financial ratios regarding to these kind of things. So, and I can, of course, then share with you that despite the magnitude of number of films, this will not affect any marketing budget. We will do this within the spending that we have always done, so it will not be an effect on that. We will be more productive, and we will create more energy, and we're actually working on this locally in Insjön, setting up a film studio there. So, I think that sums up the quarter. I hope that I've been able to explain in terms of if I summarize the quarter, we are leaving another record sales behind us with an improved profit. We have strengthened our financial position. And fair to say, we may have some currency headwind, but I think that they also seen that we have high energy for the future in terms of all the new initiatives we're about to launch. With that, I'm closing my part of the presentation and welcoming Niklas up here on the stage, who would lead from Carnegie, who would lead the Q&A session.
Thank you. Yes, I am Niklas Ekman from Carnegie. And as you indicated, of course, one of our key interests here is the currency effects and how these will affect you. And I'm not going to dig too deep into this, but just to keep things clear, when we're looking at the Q1 results here, you had roughly a 10 basis point decline in the gross margin, but the underlying decline was greater because you had a positive impact of about 1 percentage point or negative 1 percentage point in the previous year.
The negative, yeah.
Yes. So underlying your gross margin was down more than 1% this quarter. And I'm just trying to see, because on one hand, the US dollar effect will increase and become more severe. On the other hand, you will also have more time to compensate with price hikes. Is that the right way to think about this, or should we really be concerned that the gross margin could deteriorate a lot more in the next 2 to 3 quarters?
No, I think, and I tried to explain this as a concrete way as I can in terms of how we are now working on if you just make the calculation, of course, with the large gap on the dollar, but also adding on the further weaken of the Norwegian krona, it's not going in our favor. And we are doing a lot of activities, as you've seen. But I also have to say, I would not highlight this if the short-term impact was insignificant. But that, of course, is related to, as we are sharing, the coming quarters. We are then confident that over time, we're going to sort this one out.
Yeah. And turning to the different markets, I guess Norway and Finland in particular, you are talking about a bit of a challenging consumer environment, particularly consumer confidence. Still, if you look at your numbers, you've been doing quite well in both Norway and Finland. Have you been gaining a lot of market share? Do you think your particular segment has been doing better than other consumer segments?
No, I believe that first of all, we are doing a lot of activities in the company, and particularly, I would say, the operation particularly in the stores and all our sales channels is doing a lot of activities to take care of our customers in a good way. Looking outside that, Norway and Finland, somewhat more softer confidence tends also to where we are a value retailer, and I think value retailers in general are gaining market shares in this climate, and so do we. So correct, I think that we are taking advantage, of course, that we are a value retailer that is appreciated in somewhat more rougher times.
What about the UK market? Because in the UK, you had a period of about 1.5 years where sales growth was clearly accelerating. But now, if you look in the last 8-9 months, it's been softer again. Partly, I know that there have been effects of the inventory buildup in Dubai a year ago. But even adjusting for that, it appears that your momentum in the UK is a bit slower again.
No, I think well, I would say not so many quarters because we have looked at even we are actually reporting the UK like-for-like growth, but rightly so. If you look at the spring and the summer, it's not as been the strong growth as we saw a year ago. Coming back to, of course, again, that if I look at this summer, last year we had a 15% plus growth on our like-for-like in the UK. We are meeting these numbers. We want to see more, to be clear. We want to continue to take the next step. But I think we also, at the same time, we're meeting some high numbers, and also high street traffic has been really soft in the UK during the summer. So that has, of course, affected also somewhat Clas Ohlson. But I think that we are now gearing up for taking the next step. We're looking at our store network. We're looking at as well in terms of how we can capitalize on the brand, particularly focus more around the London area and take some of the next steps there to continue to drive that agenda. So I would have liked to have reported even further growth, but I think it's fair to say if you look at the numbers, we are meeting some high comps, and we have a positive momentum behind us before that.
And the new expansion now with a smaller 300 square meter type of store, what kind of rollout and evaluation phase are you looking at there? Is it another dozen stores evaluated, or?
I think that we are now contracted 2 stores. We think really good locations. I think this will give us a fairly fast feedback in terms of how we are. Now, of course, we need to give it some time, of course, as always. But we have built up some of the brand. We are going to work with pickup in store and work on some of these items. We need to learn that as well. But I think we will quickly give us some feedback in terms of how this is developing, and then we'll act accordingly.
And if you look at your international expansion in general, you have a financial target that your investments in new markets should stay within 2 to 3 percentage points margin impact. I believe now, according to my estimates at least, you are at roughly half of that level. So does that mean that with the German expansion, with the resumed UK expansion, you see potential for that to more or less double over the next few years, or are you planning a more cautious rollout in, say, Germany?
No, I think that we are, you mentioned the comment in terms of we are not rolling out 20 stores, smaller formats in the UK in one go now. We are now a couple of stores, there may become one or two more, but that's going to be a balanced way. So in terms of also looking at that, we are handling the financials around that. I think also when you look at the Germany expansion, it's very clear that we are focusing on one city. We're going to make one impact. In Hamburg, we have 3 fantastic store locations that we're going to open up. That will have some impact, but of course it is controlled in a way in terms of how it's going to impact the company's financials.
So those 3 German stores will be basically evaluated over a few
that
years.
Will give us exactly. That will give us a good hint in terms of how which we think the high interest of the German consumers and the feedback. But of course that is in theory, and now we're about to see it in practice as well.
Let's see if there are questions from the floor here as well. Yeah, Stellan.
Hi, Stellan Hellström with Nordea. I was just wondering on the SG&A costs. Maybe the leverage from the strong sales in this quarter was not as high as I would have expected. Is there something to comment on that in terms of how costs are developing now and will develop going forward?
Well, I think if you just make the ratios around 30% and we like for like with 4, just that mathematically should have given you 0.6 or so in terms of productivity gain. As commented, there are some minor changes in this. We had somewhat higher rebuild and startup cost in the quarter. You have some balance between marketing and so on, but these are on the minor side. So we are getting the efficiencies, and I think we have still, not to forget, salary inflation and so forth, particularly in Norway and Sweden.
And do you see anything changing this picture going forward?
Not really, no.
We have 2 questions that have come in from Eric Sandstedt here that have been sent in to us. And he's wondering that you're now stressing the US dollar impact, if that means that you think that basically consensus estimates are not fully reflecting this, and that's why you are stressing the dollar impact.
Well, it's not me to comment on the consensus. I can only reflect on what we see in the company and how we are looking at it and how we're seeing it the coming quarters, and I think I've been fairly clear on that.
He also asks about the like-for-like sales development in the UK. How much like-for-like sales basically have to increase in order for you to reach break-even, or also whether there's a gross margin issue in the UK market that affects profitability?
No, I think to answer the first question, there is no gross margin issue in the UK. I think we are meeting and we are looking at it from where we are very competitive on our price position in terms of which is equal to the Nordics, so that works fine. But obviously, if you look at it while we are working on the UK and taking that, we need to take next step. I think we have seen a positive momentum over the last, as you mentioned yourself, couple of years. But it's not enough. We need to take next step. We are now doing that we are looking at our store network. We're taking some action on that. We're also looking into how we can capitalize on the brand that we built up and looking at more efficient sales per square meter in terms of how we are driving our operation in the UK. Part of that is now to launch the new formats.
Mm-hmm. And we have a third question from Erik Sandstedt as well, and he's wondering what type of price hikes would you need to fully offset the US dollar effect?
My easy answer on that is, as I think I shared, from a competitive reasons, we are not disclosing our pricing activities. And of course, but if you can look at it, if you look at every retailer today that is working with sourcing from a dollar perspective, of course that when you're having a dollar change like a 30% growth on the dollar, that gives a magnitude in terms of what your price is going up and how that then needs to either with efficiencies, with sales mix or other areas, but also in terms of how that will impact your margins. But again, I think the journey that we are on in terms of how this is developing in the market, we are following it closely. We're seeing some steps. We are also taking some steps, and I think this will continue.
You mentioned that you are looking at more efficiency improvements and more direct sourcing. I mean, these are areas that you have been working on quite a lot over the last few years. How much more is there you can do in direct sourcing and further efficiency improvements?
In terms of how we are developing the range and the sourcing, of course, if you look at the recent development we've had, just seeing around us here in terms of all the improved quality and design we've taken on our own private label as an example, increasing now the share of our own products. Customers likes it, and that also gives us an opportunity as well to cut out middlemen and to increase our direct sourcing. We talked about this back in 2008 when we took the large step in this, and so we've taken the large hike. But of course, we are gradually continuing to work on these to secure that we continue to improve our efficiencies in this. And that's a daily work to work on how you can always be more efficient and how you can work with your suppliers, but also the whole supply chain. So we are taking steps, but it's not going to be the hikes, but it's going to be a gradual improvement.
Mm-hmm. Turning back to expansion, I mean, you indicated here that you're looking at further expansion in the Middle East, and I think you've indicated before that you would have preferred maybe to see a stronger expansion, but of course expansion in the Middle East is very much up to your franchisee as well. What's holding back the expansion pace? Is it tough to find locations? Is it a disappointing initial development? Or
No, but when we started the operation there, and as always, which is no matter what country we've gone into, it takes some time to build up the relationship with the customers. Clas Ohlson is something different, a new concept, is somewhat unique. And at the same time, we looked at with our partner there, where would be the next location and how would we find that in terms of size. Looking at Dubai is a popular area at the moment. It's not that it's empty, a lot of empty spaces there. So that has taken some time. But as I commented as well in the report, the development we're now seeing in Dubai has been really positive. which of course is encouraging not only for us, but also for the partner that we're working on. So it's full focus now to find the second location. Would we and the partner would have liked to see that already been open? Yes. But it's taken some time to find the right spot. It is a competitive market from a space point of view at the moment in that area.
Mm-hmm. And at the same time, you have now just closed your first store in the UK, and you've downsized another store. Do you see a need to do further such measures in the UK market in particular, or are you quite pleased now with the portfolio you have in the UK?
No, I think clear about that we are working on to see how we can improve the efficiencies in the UK with focus now on strengthening the business around the London area. Does that mean that it may be that some other stores will be affected? Yes, it may happen, but I think it's also evaluated store by store, where we're seeing how can we optimize these stores, how can we work on it in terms of to give it even a better platform. I think it's, I mean, when we looked at it, if you looked some years back, when we opened up the first stores in the UK, take Manchester as the store and some others, we took some of the opportunity with the store that Woolworths, as an example, collapsed, which was fairly large stores. And I think if you see the sales ratio per square meter, some of these stores are a bit large for us. So that's an opportunity for us to take down space.
Mm-hmm. Okay, let's see if we have any questions from the conference call.
Ladies and gentlemen, if you wish to ask a question, please press 01 on your telephone keypad. We appear to have no questions at this time from the telephone conference.
Okay, are there additional questions from the floor? Not at the moment. Maybe I can just ask online development. You talked about online here and the opportunity you're seeing. You're no longer reporting your online sales, and I know that when you were, they were shrinking slightly as a share of total sales, and I think it was below 2%. Since then, I know since you stopped reporting, you've mentioned that you've seen a very positive development.
Well, actually, we actually reported some positive development before we stopped it as well.
You
just
did.
To be fair. Just
you
to be
did.
Very
you
fair.
did.
Yes,
but it hasn't changed dramatically for a long period of time, which probably is because you've been opening very many stores as well. So there's
but I think, and I will come back to that. When we launched the new platform, we shared that we had a very positive, and we shared the numbers. But also we thought that it's going to be too much focus on individual sales channels. So for us, coming back to how we look at it, these channels are working really together. Just as an example, when we're launching pickup in store, how do you measure? Where does it come from? Is it coming from the store, or is it coming from where you placed your order? So of course, these are combining channels that work together. And what we call the Rupo effect is very high in the Clas Ohlson structure. A lot of our consumers are working with our e-com or digital platforms to search, get ideas of products and so forth, and they're working on that, and then they go, since the store network that we have is conveniently located, so it's easy to go to the store and then pick it up. So for us, it's really a combination, and therefore we think it's more relevant to report this as one. Having said that, and I think it's fair to say, I'm also pleased to see that also the sales progress that we see in our e-com is really doing good.
Okay, good. And finally, just a question to understand your sales development. You had several years, in 2008 to 2012, you had a quite weak or mostly negative like-for-like sales development. If you look now in the past 2 years.
Consecutive years.
In the past 2 years, you've seen a clear positive trend. Yeah. What is different now compared to before? Because I know initially when we started to see positive like-for-likes, there was a lot of speculation that you had been raising prices and that price hikes were an important driver. But the sales have continued to grow strongly. So what is different now in the last 2 years compared to the previous 9 years?
Well, it's not 9 years, but I think, in all fairness, I think it's fair to say that if you look at what have happened during this period, we had a very positive consumption up to 2007, 2008. from 2005, the competitive landscape has really expanded also for us, as well as we have expanded our store network. So we've had some internal, what we call cannibalization. Look at back in 2005-06, I think we had 4 or 5 stores in the Stockholm area. Now we're up to almost 20 stores in the Stockholm area. They're all doing great, but of course these stores that we've added on have had some impact on the existing stores around us. That's one area. The other area is 2008, when we tend to forget, we had a financial crisis. The consumption was not so strong. So, of course, that also had an impact. Now we are more out of that. We see a more positive momentum in terms of in general in the market. But also I have to say that I think that we are also doing a lot of activities in Clas Ohlson to meet the customers and meet their needs, which I think is also getting some positive effects. But I think you have a combination of various reasons why we noted a soft period in 2008 to 11 or so. 12.
Very good. Very good. I hope you continue on a positive trend.
Well, we're working on it.
Yeah. I think that concludes our presentation for today.
Let me then sum up and say thank you all for joining. Thank you, Niklas. Thank you all for coming to our financial hearing. And hope you have a good day. And if you have time, I think we're opening up our cashier here so you can spend some good time in the store as well. Thanks a lot. Thanks for coming.